Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets behind the headlines. And today we're diving deep into Baillie Gifford Fund's latest shareholder report, a document packed with numbers that tell a fascinating story about their investments. So what exactly are we looking at here? This is a certified shareholder report from Baillie Gifford Funds, and it gives us a snapshot of their financial health as of June 2025. Think of it as a detailed checkup on a whole bunch of investment funds, a bit like looking under the hood of multiple cars at once. This report is all about what happened in the first half of 2025 for investors in these funds. Management investment companies file these reports to let shareholders know what's going on so they can make informed decisions. The SEC reviews these filings too. It helps them keep an eye on the market. These filings are pretty standard, but the real story is in the numbers for each of the funds. We see a list of quite a few funds here, each with different investment focuses like China equities, EAFF growth. That tells us Baillie Gifford is playing in a lot of different sandboxes in the investment world. Let's zero in on some of the key financial statistics. For many of these funds, the net assets are quite substantial. For example, the Baillie Gifford Emerging Markets Equities Fund already has over $5.9 billion in net assets. That's a huge amount of money being managed, and that kind of scale certainly brings its own set of challenges and opportunities. It also means their investment decisions have a big impact. Now, this is interesting. For several funds like the Baillie Gifford China Equities Fund and the Baillie Gifford RP Plus All Cap Fund, they are reporting zero advisory fees, paid net of waiver. This immediately makes me wonder what's behind that for the period. Usually advisory fees are a significant expense. It's likely due to fee waivers or reimbursements from the manager, which in a way is good for investors in the short term, but it's important to understand the long-term sustainability of this. The portfolio turnover rate is also a key indicator for investors. A rate of 6% or so for some funds like the China Equities Fund suggests a pretty hands-off or long-term investment strategy. They aren't actively trading in and out of positions frequently. This aligns with a growth-oriented philosophy where they're looking to hold companies for a good while to let them grow. Now let's dig into the industry sector breakdown. This is where we get a real feel for where the money is actually going. For the Baillie Gifford China Equities Fund, we see a massive 27.5% in internet stocks. That's a huge concentration in one sector and signals a strong conviction in this area. Then we have auto parts and equipment at 7.2%, retail at 6.1%, and home furnishings at 6.0%. That's quite a bit of focus on consumer and tech related areas within China. The other sectors category is also quite large at 19.4%, which means there are holdings spread across various industries that don't fit into these main buckets. The developed AIF All Cap Fund tells a different story. Here we see a more diversified approach with commercial services at 9.3%, banks at 8.5%, and internet at 7.7%. The other sectors here is even larger at 33.9%, suggesting a broad diversification strategy outside of the top few categories. When you see a large buffer in other sectors, it means the fund is spread quite thinly or holds a lot of smaller niche investments. And for the US Equity Growth Fund, the top holding is again internet at 37.7%, followed by software at 26.5%. That's a massive 64% just in those two categories. This fund is clearly laser focused on the digital and software economy. The other sectors are much smaller, with biotechnology at 4.8% and semiconductors at 3.9%, indicating a strong bet on the future of technology and innovation. Scroll down a bit and we find interesting details on divestments. Under the Baillie Gifford developed AIF All Cap Fund, they divested shares in Atlas Copco A and Eperite B. These divestments are linked to the Sudan accountability and DV involved with Sudan based on that particular law. It shows a compliance consideration in their investment management. Now, this is quite unusual for many of the funds listed. For the Baillie Gifford International Smaller Companies Fund, the total number of portfolio holdings is reported as 0. This, along with the note that the fund liquidated on July 21, 2025, tells a clear story. This fund is no longer actively investing. It's in the process of winding down and returning assets to shareholders. It's important for investors to be aware of these liquidation events. Speaking of divestments, we see more instances of the Sudan Accountability and Divestment Act of 2007 being cited again for Atlas Copco and Epiroc shares being sold by the Global Alpha Equities Fund and International All Cap Fund. This highlights a commitment to adhering to specific ethical or legal divestment requirements. It's not just about financial returns, it's also about considering broader impacts. Let's jump into the core of the financial statements for the China Equities Fund. Here we're looking at the industry diversification table. This table gives us a breakdown of their investments by sector in dollar values and is a percentage of net assets. For example, we see 74595, their value in internet stocks, which represents 274595, their value in internet stocks, which represents 27. 5 for FOV is 274595. Their value in internet stocks, which represents 2745%. That's a solid chunk of the fund. Now check out the financial highlights for a Class K share of the China Equities Fund. The net asset value per share started at 511 at the beginning of this 6-month period and ended at 597. That's a pretty solid jump, indicating good performance for this class of shares over the first half of the year. And the total return based on net asset value for this period is 16.83%. That's a fantastic return, especially in the context of a 6-month period. It tells us that the fund's strategy for the China equities market was working well during this specific time. Looking at the Emerging Markets Equities Fund, we see a total advisory fee paid of nearly $14 million. This is a significant amount, and as a fund investor, it's crucial to understand how these fees impact your overall return. Even a small percentage can add up considerably over time. The report also touches on principal risks, and it highlights some very real-world concerns. They talk about market disruption and geopolitical risk, mentioning things like war, terrorism, public health crises, sanctions, tariffs, and trade disputes. They specifically point to the 2022 Russian invasion of Ukraine as an example of how these events can impact global financial markets and decrease the value and liquidity of certain securities. This is a crucial reminder that investments don't exist in a vacuum. They're deeply connected to global events. For the Baillie Gifford International All Cap Fund, a key number is the net assets at $305 million. This fund is a significant player. Its portfolio turnover rate is 12%, which suggests a moderate approach to trading. The breakdown shows a diverse range of sectors, with internet at 12.5%, semiconductors at 11.2%, and banks at 9.1%, and a substantial 29.2% in other sectors. This indicates a well-diversified international equity strategy. Now let's look at the Baillie Gifford US Equity Growth Fund. With net assets of about $20 million, this fund is smaller than some of the global giants we've looked at. The portfolio turnover is relatively low, at 7%, showing a long-term growth investment style. The sector allocation is heavily weighted towards the digital economy, with internet at 37.7% and software at 26.5%. This is a clear bet on where they see future growth happening. So what's the takeaway from this report? Well, Baillie Gifford manages a very diverse set of investment funds from specific country, focuses like China, to broad global strategies. We see some funds with very high concentrations in sectors like tech, which indicates a strong conviction of the managers. Other funds show a more diversified approach. The expense structures vary significantly between share classes, and some funds are undergoing liquidation, which is important for investors to be aware of. The reliance on a manager's fee waiver for some funds is a point to watch to ensure long-term sustainability. Finally, the report highlights that even sophisticated investment strategies are influenced by global events and risks beyond just market fluctuations. Looking at the financials, what stands out is the sheer scale of assets under management for some of these funds, like Emerging Markets Equities Fund, but the US Equity Growth Fund is much smaller, which means different risk profiles and potentially different growth opportunities. The high concentration in internet and software for the US Equity Growth Fund is a bold move, reflecting a strong belief in that sector's future. For investors in the smaller Baillie Gifford International Smaller Companies Fund, the liquidation is the biggest news, and it's crucial to remember those investments are being wound down. In conclusion, Baillie Gifford seems to be balancing concentrated bets on growth sectors with broad diversification in other areas. The performance varies across funds, and the management fees are a consistent consideration. The report also serves as a good reminder that global events and ethical considerations like divestment play a role in investment decisions. Alright, that's our breakdown of Baillie Gifford's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.